What if I told you the paper in your wallet, the coins in your pocket, are quietly disappearing, not by accident, but by design? The shift has already begun. From New York to Beijing, from London to Lagos, cash is vanishing. But what replaces it might not be freedom. It might be control. Because when money goes fully digital, someone somewhere will hold the switch. And once that happens, money won't just be what you spend. It'll be how you're allowed to live. Stick around, mate, because by the end of this video, you'll understand exactly how we got here, who is leading this transformation, and why the world's financial system will never look the same again. Let's begin. It's happening quietly. In Sweden, only 6% of transactions use physical cash. In China, street vendors who once relied on coins now flash QR codes. And in the US, major banks are closing branches faster than ever. ATMs are disappearing from rural towns. The idea of cashless society used to sound futuristic. Now it's becoming policy. Governments say it's about convenience, safety, and modernization. But history shows every technological leap in money comes with consequences. From gold coins to paper, from checks to cards, and now from cash to code. But before we look at where we're heading, we need to understand how money got here. Money has always been about trust. Thousands of years ago, people traded shells, salt, and gold. Then governments stepped in, promising that paper money was as good as gold. But after 1971, when President Nixon ended the gold standard, that promise changed. Money became whatever the government said it was. Fiat currency. Its value backed not by gold, but by belief. And belief, as history shows, can be fragile. Inflation, financial crises, wars, they all shook confidence in cash. And as digital payments emerge, credit cards, PayPal, Apple Pay, the idea of physical money started to feel outdated. But convenience always comes with a price. And this time, the price might be privacy. In 2024, the global digital payments market surpassed $9 trillion. Every second, millions of transactions flow through servers owned by private corporations and central banks. Every purchase, every transfer, every donation, all traceable, recordable, controllable. This is the datafication of money. Your coffee run, your rent payment, your hospital bill, all leave digital footprints. And while this system made global commerce faster, it also made the idea of anonymous spending nearly impossible. Cash doesn't track you, but digital money does. And for governments and central banks, that's both an opportunity and a temptation. This is where the story turns. Central Bank Digital Currencies, or CBDCs, are not cryptocurrencies. They're digital versions of national money, fully controlled by the state. Imagine your wallet, but on a government server, your salary, your taxes, your savings, all programmable. The US calls it FedNow. China has already launched its digital Yuan. The European Central Bank is testing the digital euro. On paper, CBDCs promise faster payments, financial inclusion, and reduced fraud. But the underlying power is enormous because unlike cash, CBDCs can be programmed. Governments could decide where, when, and how you spend your money. They could expire funds to boost spending. They could block purchases deemed unnecessary. And they could track every cent you send forever. If that sounds dystopian, remember, it's already being tested. In China, during the pandemic, the digital yuan was distributed through smartphone apps and could only be spent at approved stores. It wasn't science fiction, it was policy. In a fully digital system, money isn't just an economic tool, it becomes a behavioral tool. Imagine a government stimulus that expires in 90 days, or a carbon allowance that limits how much gas you can buy, or fines automatically deducted from your account. No appeal, no delay. The technology already exists. The question is, how far will it go? And what happens when that power is linked to digital identity systems, social credit scores, and AI-driven analytics? Money, identity, and control merged into one interface. The digital revolution in money isn't just led by central banks. Tech giants like Apple, Google, and Amazon are already embedded in the payment ecosystem. Every swipe, scan, and subscription feeds their data engines. And as AI becomes integrated, your spending behavior becomes an input for prediction, even manipulation. Ever notice how your credit card company knows your habits before you do? Or how targeted ads appear seconds after a purchase? That's not coincidence. That's the data economy at work. And when you merge government oversight with corporate data, what you get is a financial panopticon, a world where privacy is optional and transparency is mandatory. But here's the nuance. Digital money isn't all bad. In many developing countries, it's a lifeline. People without bank accounts can now receive payments instantly through mobile apps. Cross-border remittances are faster, cheaper, and more transparent. For policymakers, it means fewer tax evasion loopholes. For businesses, it means global scalability. And in crises, like pandemics or natural disasters, digital money allows for rapid financial response. So yes, going cashless brings power, but it also brings efficiency. The question isn't whether digital money is good or bad. It's who controls it. When Bitcoin launched in 2009, it wasn't just about profit, it was about protest. Satoshi Nakamoto's white paper proposed a world where money was peer-to-peer. No banks, no intermediaries, no gatekeepers. For over a decade, crypto became the digital counterculture, a rebellion against centralized control. But as governments explore CBDCs, many see crypto as both a threat and a testing ground. Ironically, the same blockchain technology that promised decentralization is now being used to centralize control. Money is power, and whoever controls the flow of money controls the future. The US dollar dominates 85% of global trade. But as countries like China, Russia, and BRICS nations explore alternatives, the financial balance is shifting. Digital currencies give governments a new kind of weapon: financial warfare through code. Sanctions, trade restrictions, asset freezes, all can be executed instantly, globally, and silently. And as the world fragments, one thing becomes clear. The future of money is a new kind of Cold War, fought not with bombs, but with bytes. We stand at a crossroads. One path leads to efficiency, innovation, and global connectivity. The other leads to surveillance, control, and loss of autonomy. The end of cash isn't just a financial shift. It's a philosophical one. It challenges what freedom means in the digital age. Because when money becomes information, whoever controls information controls life itself. So what's the answer? Transparency, accountability, and above all, awareness. Because the future of money won't be decided by governments or corporations alone. It will be decided by us. So the next time you tap your phone to pay for coffee, remember, it's not just a transaction. It's a data point in a new world order of money. Will this digital age empower us or enslave us? That depends on how awake we stay. We're building one of the biggest finance and trading channels out there, breaking down everything the media won't tell you. So if you find this video interesting, make sure to subscribe, where we will be uncovering the truth.